All right, it's March 15th, 5 days since the initial bank run has began, and now today it has gone global. So why do I have a Swiss passport and two Credit Suisse cars? Yes, it's for the thumbnail, but today it was all about Credit Suisse, what's going on in Switzerland, and now today the bank run has gone global. So Chad, this was absolutely wild, and even then I'm going to get into all of it for you, and we're going to talk about this update. But what I want to start with is that the activity in the bond market today, the amount of people rushing to buy bonds simply out of fear. They don't even care how much it has gone up recently because there's still a lot of room if anything did happen. There is a lot of people buying in. You have people speculating on the upside for bank stocks and a lot of people buying protection for both bank stocks and the overall market. So why am I telling you all this? Because everybody's asking, is this a big deal or not? Is this serious or not? And clearly it is. But what I want you to understand about this whole thing, 5 days in right now, is simply this is a real life stress test. That's all it comes down to. We are going through a real life stress test. Banks are faced with the challenge of seeing what happens if deposits dwindle and go out at a rapid pace. How do their balance sheets respond to long-term maturities and the unrealized losses and all of this? And this is how it's working. And this even relates to Credit Suisse today because, like we said yesterday, those share prices of those bank stocks, they have a lot of implications. But essentially, in the middle of this stress test, this is how it's going to work. If you are a bank and you're going through all of this, you're faced with people leaving and everything else, the macro issues and rates, if you could get through these next couple of days and weeks without having to sell anything at a loss, that would be your bonds or anything else, and or having to sell shares, then you will be good. If you don't, then you have a problem. So pretty much which banks are going to survive? Is this a threat to the financial system? It really is, but only if you meet this criteria. In the next couple of weeks here, the companies that will be forced to, the minute they announce that they have to sell shares, investors are going to run towards it. All the money is going to leave. Or if they sell any long-term securities, same reaction, especially after we see what happens with the Fed. But some banks will be able to get through this. So I thought we should start with that. I hope that helps. And actually, before I get into the Swiss thing, are you ready? We had tinfoil today, bro. I had some crackhead activity at my house. I thought it was the banks because we keep talking too much bank run. I don't know. I knew it wasn't a stalker, Chad, because I'm like, man, you should have just clapped me. But I can't show you the video. Here's the breaker box. But a crackhead went to my house today and stole my electricity breaker box. That's why the stream went down. Yeah, I have video. That's why I'd show you the video, but it shows everything about my house. So I can't show you the video. Well, I can, but I just prefer not to. But they drove up into my driveway in their Kia. Then they came out, stole my electricity box, and apparently they did it to like 15 of the other neighbors. So they made like $3,000 off of electricity boxes. I don't know, maybe a new side hustle, but anyways, I hope you liked the video and drop a thumbs up and make sure you subscribe. We do it every day, but let's get into this now, man. After today, the bank run has gone global. European bank financial risk exploded. Even all of European volatility. It's not at its high from what we saw in October, but it was definitely a big shock. And one of the big things about today, why this is so big that it's affecting Credit Suisse in Europe, is simply because a lot of people thought Europe would have taken more time. A lot of people thought this was just contained to the U.S. Regulators stepped in quickly. If it was going to hit Europe, it was going to take a couple of months. It happened here in a couple of days. But what happened was Credit Suisse, their default swaps, they went through the roof. They actually hit a record high. And everybody panicked at Credit Suisse, and here's the reason why. It was this comment from Saudi National Bank Chair Ammar Quadri. I know I'm Arab, I should know how to say this, but this is what he said.
Whether you would be open to assisting further if there was another call for additional liquidity from Credit Suisse?
The answer is absolutely not, for many reasons, outside the simplest reason, which is regulatory and statutory. We now own 9.8% of the bank. If we go above 10%, all kinds of new rules kick in, whether it be by our regulator or the European regulator or the Swiss regulator, and we're not inclined to get into a new regulatory regime. So I can cite 5, 6 other reasons, but one reason which is, that there is a glass ceiling, and we do not intend to entertain going beyond it, and we're there now.
And pretty much he said there's no chance of them buying back into the stock, and they are the top shareholder of Credit Suisse now. Pretty much whoever's giving them money, they're saying we're probably not going to give any more, and people freaked out on that. So this is really important for 2 reasons. Number one is Credit Suisse was already in a lot of drama. Like, they were going through a ton of different things for a very long time, especially end of last year. So even the fact that their credit default risk skyrocketed and went even higher, that's absolutely insane, because it was already high, and this has already been like the slowest car crash we've seen in a while. So that's the cherry on top. But a lot of this should have been accounted for, and even this year, you could see here, they warned about irregularities not too long ago. They were saying they were going to experience losses and all of this. And now today, it seems like the straw that broke the camel's back was Mr. Ammar Al-Quadri saying, nah, there's no chance we're buying in anymore. So that's the first thing. But now the second thing is the broader factor that I'm talking about here. And simply, this is an escalation to this whole entire bank run. The fact is that this is now potentially already spread to Europe, and that's what people are worried about, because now it's not only is America going through potential bank runs and all these issues, it's now occurring on a whole nother side of the world. So now the amount of safe havens you get, it's not going to be good. That's why you'll notice the dollar actually went up today, because now if everybody had the problem like inflation, they're going to go buy the dollar. Whereas a lot of, for the first part of this, people kind of thought this was just going to stay in the States. That's why now even today, you did hear from the SNB, the Swiss National Bank, and they announced their own set of quick intervention all over again. So, I mean, you've already heard it from the Treasury and Fed, and we've talked about this, but even today, that's that big pop here in the market. This was all on the headline that the S&B was going to provide liquidity. So they said they would provide it if they needed it, but as of now, we haven't heard anything on that. But even to apply this to the broader sense, like I'm telling you here, the real worry is we need to see how their intervention goes, see what happens with Credit Suisse, but now moving forward over the next couple of days, we want to see if this spreads and if it hits more European banks. And the problem with Credit Suisse, because we've already known it's been a problem, the problem is if this just kind of sets the other domino off in Europe, and now you got dominoes falling in the United States and then dominoes falling in Europe as far as banking goes. So that was the first big part, and clearly now this was the development here into this whole banking crisis and bank run. But now the other big part about today, like I told you in the beginning, the bonds went insane today. I'm telling you, it was nuts, and people are buying it out of sheer protection, and it is showing that investors want protection, but it also means that they're betting on the future. Pretty much now people are getting to the point, and it's crazy because we flip-flopped from yesterday with yesterday's CPI kind of saying, okay, we're going to stay at 25. No, the amount of bond buying you saw today, activity across the whole curve was insane, and most of the day we were pricing in the fact that Powell will be pausing. That's most of the day. So even in the next few days, we're at 50-50. That is going to be volatile. But even the Fed futures today, they got halted with how fast and crazy they were moving. That doesn't really happen too often. So all of this is boiling down now to the Fed, and that's what I'm saying. As we move forward here, you're watching people get the bonds. Now people are asking the question, is what's going on with the banks? Is this really going to detract Powell, and are people going to focus on that more? And one thing I did bring up today, before I tell you a little bit about what to watch in the future, we brought this one up on stream today, and simply pay attention to what they did in the UK, because this could be a potential thing that happens here. Remember with the UK gilt scenario, just not too long ago, they continued to raise rates, but they created a special lending facility to support the bonds. That's literally what we are doing now. We just need to find out the rate decision. And then also on top of that, ECB for Europe is tomorrow, so they're going to make a decision, and then it's going to get even crazier. But what I'm trying to say here is that one potential thing, because now Powell moving forward will be key, but one thing to keep in mind, the Fed could do this. Maybe Powell does continue to raise rates by a little bit, and then they create a special facility to support any of the banks, but that's why these Fed futures and bond moves leading into all of this, that's why it's going to be so key in the next few days. But don't let me get too ahead of myself. If you have any questions, let me know below. Maybe I can make a follow-up on the weekend, or we could talk about this more on stream. But what I'm telling you moving forward, we're only on day 5 of this now, and next week we have Powell, and really all this boils down to is next Wednesday in Powell. The first thing we've got to see between today and next Wednesday, do any banks go under? Does anybody else go belly up? But now we have to worry about Europe and other places in the world, and the more instability with those currencies, bonds, all of that, then that heightens the risk. And then the second thing we got to watch out for is the Fed futures, and seeing does any data, any updates, the lack of fear or introduction of more fear, depending on what banks do, does that move the Fed futures? And if it does, and it solidifies a rate pause or even a rate cut, I think that is going to be signaling a very, very wild shift. Or if it doesn't, then we're going to watch Powell on Wednesday, and maybe he unveils some sort of rabbit out of the hat type beat. But we're going to find out. But now this is all just getting very, very crazy. Whatever Powell does from here, what everybody in the world is watching now, do any of these situations pop off where it changes what every central bank, and especially the United States, does it change the goal that we were pursuing for the last year, almost 2 years now at this point? So it's going to be wild. We're watching for the global sell-off. I mean, as far as any plays, I took 100 shares short on Apple. And if you don't remember, too, I also went long on UBS and a small option on Credit Suisse, just to play any of the news. But we grabbed these EUFNs. I brought these up on Monday, so we just brought them. But we went short on this. We were talking about this a little bit, saying, well, if America spreads, it's going to spread to Europe. Most people said it would take way too long to get to Europe. And then, well, these plays went up 200%. So that's what I'm holding. The dollar plays also ended up going up. But now I have like a play on the bonds, and I like the bonds. I mean, at this point, I don't have any of the futures. I only have TYD shares, and we're up a decent amount on them, but I kind of want more bond exposure. My problem is, like, and this is what I showed today, I like the bonds. I think a TLT play could be brewing? Yes. Now I do after today's activity and even after the flip-flop, but here's your risk with the play. It's very simple. I don't even have the play. That's why I'm like, I think we got to wait till things happen, things fail, and then round 2, I think that'll be the easier one to go after. But essentially, the way that I'm looking at bonds right now is very simple. In the short term, they're up a ton after how this whole year is played out. Short term, they're very expensive. If anything reverts back quickly, any data comes good, or Powell doesn't really change anything, and be careful of Powell signaling, then you're going to lose a lot of money on the short term. Zoom out, this shit is still cheap as hell. There's still a lot of upside. That's why I'm even saying, depending on what happens, we could wait. And here's the interesting part. The MOVE index and bond volatility has been higher this week than March 2020. That's when we hit the second TLT play for like what, 40, 50,000% gains or something like that. But this week you don't see that on the options there. So I think we have time, but the point is now you're watching a fear reaction in bonds. I think you could go for it if you want, but obviously none of this is a recommendation. I only got a little bit of the shares there, and we're going to see how we play out with it. But the whole idea with all of it is that this is going to be a development, and you're watching every day. It's either escalating or something changes, but barely, and then people feel good, then they don't. So it's going to be wild here. But once we get this answer, what Powell really does, this is going to determine a lot. This will even let us know if we are going to get deflation or not. And you might even get crazier videos from me. So we will see. But Chad, that is your watch list. I hope you enjoyed it. Thank you for being there today as well. Shout out to all y'all subscribing and showing some love too, baby. But let's get it and close the week. Let's see what day 6 brings us tomorrow. And you're blessed. Drink that water. Stay hydrated, healthy, all of that. You know what to do. I don't have the horn. I got this. I'm switching it up on y'all, bro. Switching it. And who would have thought? Who would have thought? This thing was telling us the whole time. Swiss. The Credit Suisse. Credit Suisse. Crazy. All right, I love you.